Good afternoon, everyone. I am Professor Abhida Tiwari from SGI MBA from SIRT Bhopal. This video is for the leverage, financial management third unit. So we can start with the introduction part. So with this video we explain these points: meaning of leverage, types of leverage, operating leverage, financial leverage, difference between the operating and financial leverage, combined leverage, and exercise. What is meaning of leverage? Leverage means the employability of assets or funds for which the firms pay a fixed cost or fixed return. The concept that is used to study the effects of various mix of the debt and equity on the shareholders' return and risk in the capital structure of the firms is called leverage. Types of leverage. Leverage, three types of leverage: the operating leverage, financial leverage, and combined leverage. What is operating leverage? Meaning of operating leverage. Operating leverage is defined as a use of fixed operating cost and magnify a change in profit related to the giving changes in sales. Operating leverage is contribution upon operating profit or contribution upon EBIT. EBIT is earning before interest and tax. Contribution, sales minus variable cost. Degree of operating leverage. The multiplier facts resulting from the use of fixed operating cost can be measured by the degree of operating leverage. The degree of operating leverage at any level of output expressed as a ratio of percent change in operating profit to percent change in sales. Its degree of leverage is percent in profit upon percent in sale, or percent change in EBIT, percent change in sales. Characteristics of leverage: it is related to the asset side of the balance sheet. It is directly related to a break-even point. It is related to selling price and variable cost. It is involved business risk. What is financial leverage? Meaning of financial leverage: the firm ability to use the fixed financial charges cost to magnify the facts of the changes in earning before interest and tax is EBIT on the firm earning per share. It's sometimes treated as a trading on equity. The financial leverage is EBIT upon EBT. Is EBIT, EBT minus PD upon 1 minus T. Is EBIT is earning before interest and tax. EBT is earning before tax. PD is preference dividend and T is tax. Degree of financial leverage. The DFL is degree of financial leverage is measures two ways. Is percentage in per earning share per shares is EPS, and percent upon EBIT is earning before interest and tax, and or the percentage in EBT upon EBIT, percentage in EBIT. Characteristics of financial leverage: it is related to liability side of the balance sheet. It is a mix of the method of financial. It shows the fact change in operating profit or the earning per shares due to fixed financial charges. It involves financial risk. Difference between the financial leverage and operating leverage. Objectives: the magnify the effects of change in sales volume or profit, operating leverage, and financial leverage, the magnify effects of change in the EBIT or earning per share. Relationship: established relationship, the EBIT and the sales, the relationship established EBIT and EPS. The measurement of firm's ability to use the fixed cost assets of magnify the operating profit, and measure of firm's ability to use the fixed cost funds and magnify return to the equity shares. Decisions: concern with the investment decisions and concern with the financial and capital structure decisions. Risk: involved in the operating risk in being unable to cover fixed operating cost, involve financial risk being unable to cover fixed financial cost. Related asset side to balance sheet and liability side of balance sheet. And combined leverage. Meaning of the combined leverage: the combined leverage may be defined the relationship between the contributions and the taxable income. The combined leverage is operating cost leverage into financial leverage, or contribution EBIT into EBIT upon EBT, or contribution EBT. Degree of combined leverage: DCL is measures the percent change in earning per share due to percent change in sales, and degree of combined leverage is DOL into DFL L. Percentage in EBIT upon percentage in sales. Induce percentage in EPS and percentage in EBIT, or percentage in earning per shares upon percentage in sales. Thank you. Thank you for like my lecture. Thank you.